Hello everyone, this is Calvin Professor C here. So this channel is all about helping new mortgage agent making more money faster. So today is August 15, 2019. Now what happened yesterday, August 14th, 2019 is significant. What happened yesterday, you said? Well, if you have watched the business news, you would know that yesterday, the US stock market, specifically the Dow Jones Index, has dropped 800 points. That's a lot of points. And what happened is because there is something called the inverted yield curve. You may ask me, oh, what is it? Well, I'm not here to explain the technical terms to you because it would be much too difficult for you to understand. But simply said that the short-term rate, so 1 year or 2 years, is longer, is higher than the long-term rate, like the 10 years. So if you think about something, right, say that you have a property and you will think, okay, in the long run, normally, what would the property value goes like in the long run? Will it go up or down? Normally, most things, if you hold it longer, it will go up, right? So that's, up. When it is inverted, you can think of, oh, it is going down, so it's not normal. So you can think of it like that. That's not like how it is really is, but it is easier to remember. When it is the short term is higher than the long term, it is called inverted yield curve. That's how usually I remember it, and is it normal? No, it is not normal. Okay, so what that means is that in the last 50 years, normally when you see an inverted yield curve, a recession would follow soon. And it is not like mandatory, but that's a very good indicator. If you look past in the history, most of the time if you see an inverted yield curve, there would be a recession follow. And that's the reason why the stock market crashed yesterday, because a lot of the stock price is, for example, Apple, right? Apple, the stock price is here, and the reason the stock price is here is high is because we are expecting that the Apple is going to make so much money and has so much growth and all that, and that's why it is worth this much. But if we're expecting a global recession and their cell phone is not selling, well, then maybe the stock should not worth that much. It should be this much only. And that's why everybody is selling the stock of those companies, right? So you may say, okay, well, that's good information to know, Calvin, but what does it mean for me and my client in terms of mortgage broker, mortgage client, and all that? Well, if you have watched some of my previous video, I have mentioned that fixed rate mortgage rate, those fixed mortgage rate is actually based on bond yield. So what that means is now that the 10 years bond yield is dropping, and so what that means is soon we will probably see the fixed rate interest rate from the bank and other lending institution drop. So if your client coming in to see you today and ask you about your opinion in terms of interest rate, you can actually tell them, I think it is going to drop soon. They will say, are you serious? And then maybe next week, they actually see the news and heard the news that it is actually dropping. And they would think that, oh my God, Calvin is a genius. In fact, I'm not a genius. It's just that I watch the business news and I understand how the bond yield interact with the mortgage rate. So, and then based on that, you can give your client a good, recommendation on what kind of terms and rate to give the client, right? And every client has a different situation, but if you know that interest rate is going to drop soon, then you can, give them some advice based on that. Okay, so I hope you look like a genius in front of your client, and also you learn something, and hopefully your client learns something about inverted yield curve too. Okay, so see you next week.